Moving on now, the United States has ended a key sanctions waiver that allowed certain countries to buy Russian seaborne oil. The question now is, what does this mean for India, for Russia and for Americans? Last month, Washington extended a waiver on Russia's seaborne oil from its sanctions regime that let select nations continue purchasing Russian oil already at sea. The last extension ran until May 16. The US Treasury made no move to renew the general license or announce another extension, so that means the waiver is now gone. Sanctions are part of America's broader effort to squeeze Moscow's war finances. But here's the catch: the policy may not have worked as cleanly as Washington had hoped. The US waiver came amidst an escalating Iran war and the closure of the Strait of Hormuz, pressuring crude prices higher globally. The bigger hit is on US gas prices, which has surged to above $4.5 per gallon, and some states selling $5 breached. The White House is now scrambling to ease surging gas prices, with a cut in tax being considered. The Hormuz crisis has also hit global supply chains. Separately, Washington senators have argued that the waiver is fueling Russia's war chest in Ukraine. Reports show Russia has earned an extra $150 million per day in revenue as a result of US sanctions relief combined with higher global oil prices. Analysis by the Center for Research on Energy and Clean Air said Russia's export revenues were expected to have boomed in March, with revenue from oil and petroleum product exports rising 13 to 14% month on month. For India, the waiver ends add additional pressure, while the sanctions are now projected to increase India's annual oil import expenditure by $6 to $7 billion. Indian refineries are likely to see operational costs rise by around 2% as they move away from discounted Russian crude. New Delhi had become the single largest importer of Russian seaborne crude oil during the Iran war after the sanctions waiver. India's purchases hit near record highs last month, but with that oil gone and global prices surging, New Delhi faces a fat import bill.